Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend of the channel, and just an amazing investor, Mr. Greg Dickerson. How you doing, sir?
Doing great. Michael, how are you today?
I'm doing well. So on my daily financial news, I talked about this being a big week. I saw you did a live stream just an hour or two ago, kind of with the same theme. So when you're looking at this week ahead of us, what's caught your attention? Because I agree, this is a July week, which usually is a slow month, but it's going to make a dent. I think it's going to leave a dent. So what are
Yeah,
you looking
different
at?
world right now. And, just to clear up, so it wasn't a live stream. I only do videos. I don't do
Ah,
live streams.
sorry.
Don't want to confuse anybody and they start looking for live streams.
Fair
So I
enough.
don't do
Sorry.
those. But yeah, so obviously, this is earnings season, right? So we're waiting for earnings to come out. And what's really cool about earnings right now is not only, they're obviously lagging, right? So it's what they did last quarter,
Mhm.
but they also have to provide future guidance. So it'll
Right.
give us some insight into what we can expect and what companies are expecting from earnings and recessionary pullbacks that they're potentially trying to understand and compensate for as they move forward. So that's what I'm really interested in more than anything else, is the guidance, because what's really key to the markets, what's really key to the economy and finance right now, we have a couple of caveats out there. We've got the war still. We don't know where that's going. Escalate, de-escalate. That's a big one. And then, of course, you have, inflation. So that forward guidance will give you some real key insight into, what to expect from an inflationary standpoint, how deep it may go, how long it might last. And that, from an economic standpoint, the markets, everything's kind of hinging on that, whether or not inflation is plateauing, what they're seeing, how long it'll go, how deep of a recession, things like that.
Yeah, again, I think earnings. So there's a couple of things I've been upset about the last 3 or 4 weeks, and I have a couple of stock guys, one Wall Street guy on my channel. I gave him a hard time a week or two ago. Is Wall Street analysts have yet to kind of reduce guidance in the second half and even 2023, given what we see as a consumer slowdown. I think it's pretty clear to see. Plus, you have the strong dollar, which is going to impact large and companies that have worldwide presence. There's just a lot of pain out there, and Wall Street hasn't done their job. So I'm really curious if analysts are going to cut expectations. And I saw the first one this morning of consequence, Lululemon. Lululemon is obviously an athletic wear, high end, but they did have their earnings cut, and analysts cut their earnings. We might see it this week. Analysts might wake up and have earnings cuts. And then, as far as earnings go, it really starts tomorrow. PepsiCo, right? What Pepsi, right? What's going on with both snack food, because they have Frito-Lay as well, if people don't know Pepsi. What is going on with events? What's not? It's worldwide. I think Pepsi is going to be very interesting. Not so much last quarter, because who cares? But tell us about the future. Are you taking down Are you seeing people trade down from Pepsi to water or whatever it is? Frito-Lay, or people stop snacking and eating? It's going to be really interesting. And then the one that I'm really looking at is we get like 6, 7, 8 big banks Wednesday and Thursday. I think a couple more Friday. I think BlackRock is Friday. And I want to hear what's going on with the consumer, because the trading desk is nothing. Their mortgage business is nothing. That their private equity is nothing because it's so slow right now. But what's going on with the consumer? Credit cards, savings, loan payments, bad debt reserves. Man, there's going to be a lot this week.
Yeah. So, from earnings standpoint, it will be interesting to see what people spent on, last quarter going into the summer. And then it'll be neat to see what they think the summer spending is going to look like. A lot of companies have, extra inventory they need to get rid of.
Yeah.
So they're slashing prices, Target, Walmart, Costco, they did well. They had a good earnings report, of course, guidance, we'll see. But yeah, it'll be interesting to see what the consumer trades down, to and from, and how those luxury items are affected and things like that in terms of discretionary spending. And I think what we've seen so far is that a lot of people still had savings going into this. It is the summer season, so people are taking their trips, they're doing their barbecues and things like that. But we're starting to see credit card balances rise. We're starting to see savings deplete. So yeah, the banks earnings will be interesting to see what they're seeing in terms of deposits, credit usage, things like that, credit defaults. I know that credit default swaps are at all-time highs right now. They're selling a lot of those.
Do you see car loan delinquencies are, I think, at 5% or 5.2%? They're crazy high. A lot of these stimulus ballers are going to have their cars repossessed.
I think it's a lot higher than that. And the average car payment's just nuts. I mean, it's up in the $600-700 range. And, there's more $1,000 car payments than really ever. And yeah, so there's big defaults happening and coming and repossessions. And, in that segment of the market, I think it's like 15% of the loans for cars are, behind right now, delinquent. Now, as far as default goes, that's a different level. You could be 30 days late or whatever it is with cars. I don't even know with cars, what level declares default, how far
I would assume it's 90 days, but you're right. I don't know. I can
I don't know what triggers default with cars, in mortgage. I think it's, 90 days before they actually declare you in default.
Yeah. It's it's the first time they can, right, file an NOD, notice of default. It's not till day 91, but yeah.
So the other interesting thing is that there's a thinking out there from the car market that what's going to happen is a lot of people that way overpaid in the last 2 years for cars are going to look at those vehicles and say, I paid 70 grand for this SUV. Now, 2 years later, well, I can buy the same thing for 50 grand. I'm going to go buy this other one for 50 and just walk away from that one. So strategic
defaults in cars.
Yeah. I think we're going to see a lot of that happening with a lot of people because they're paying $1,000 a month. They paid 70 grand. They can come over here and get this one at 50 for $500-600 a month. Boom. I'm just going to get rid of
away. Wow.
Yeah. And they can, and they'll buy this one first and just give that one back. Just call the lender and say, hey, take it back.
I'm done. Here's the keys. We'll leave the keys in the front seat. Yeah.
So there's, a couple of experts out there kind of predicting that, that might come down the pike. So
I had not heard that. Strategic defaults on car loans.
Yeah,
you heard it here first.
Watch and see what happens. And I tell you, some of the high income earners that, have been doing, Porsches and, all
Ferraris,
the cars, you'll see those start to, hit the auction block here pretty quick.
No, I agree. There's a term, I don't remember where I heard it first or else I'd give credit, but stimulus ballers. We're going to, again, we've already seen, I look at this stuff every day. Rolex watches, the Daytona, it already rolled over. All right. The first thing these people go is their watches. Now, next will be their cars, all this stuff. But when we look at this week ahead of us, not only we have earnings, but we also have some key economic information, right? Wednesday. Yeah, CPI. We had 8.6 last month. Expectations are 8.6, Greg, and I can tell you right now, I'm calling 8.8. We have not seen peak inflation. 8.8. What do you think of that? What do you think about CPI on Wednesday?
I think you might see a 9 handle, and if you do, I think you might. I mean,
wow, yeah, you could.
This is backward looking, right? So gas prices didn't start coming down until a week ago.
Yeah.
We're seeing rent adjustments in some areas, but this is all last month. So,
and rent's a lagging indicator, right? It's 6 months.
Yeah. So it'll be interesting to see how high it goes. I mean, I think, most of the expectations are in the 8.8, 8.9. Nobody's saying 9, but I got a feeling we could see a 9 handle, and which will be good because I think that's about as far as it'll go. And I think you could potentially maybe argue that we might plateau a little bit here, but I'm not so sure.
Yeah. I think we have peak inflation, one of the next 3 reports. And let me be clear, if we got a 9 this report, I might call that peak inflation. But yeah, Wednesday's a big day, but not to be outdone. We got 2 important reports on Friday. We have retail sales, which is going to be for June, but we also have consumer sentiment, which will be for July. And last month's consumer sentiment is the lowest on record, Greg. This report goes back to 1970. It was a 50. It's the lowest ever. And
people might be thinking, who cares? What does that really tell you? That's like the fear and greed index. So the consumer sentiment's important because that's how people plan their spending. And I can tell you, people are talking about it, watching it at all levels. They're going to take their vacation. They're going to have cookouts and all that for the summer season. But, I just got my college tuition bill for my daughter yesterday, on a Sunday.
Yeah. How rude.
Yeah. So you've got these things that people are going to start thinking about once summer is over. Man, we got, school expenses and tuitions. We've got the holidays coming up. Then there's tax season. So consumer sentiment being in the tank right now, people are already pulling back. And then you're going to have these other things start to hit the rest of the year that, really affect consumer spending. And people only, a lot of people only have so much money, right? They have an income, they have to make it work. Inflation has crushed it. So, that's an important indication of how people feel about their spending, which gives you an indication about inflation, right? Because this is all about inflation, right? And, the commodities that shot through the roof, that was the inflation trade, flight to safety, moving to commodities, because with inflation prices go up, it was a big speculative bubble that's now popped, that's headed back down. And, that's because of the recessionary fears, consumer sentiment, the retail sales, all these things that we're going to see in terms of people spending, that's why commodities are coming down, in advance of that. But then, it'll potentially shoot back up again if we see, real heavy inflation. And, there's a couple of schools of thought on oil, whether that'll hit and stabilize at $60 a barrel, or if we're just going to see that shoot right back up again.
Yeah, talking about oil, that's another big thing. I don't know if you saw this, but Russia shut off oil to Germany today. Now, this was planned.
Yeah, right? Maintenance.
Germany knew, everybody knew about it, but there's certainly a school of thought that says Russia may not be in a hurry to turn it back on, which could cause, significant issues. Because again, we're using just about as much oil as produced. There's not a lot of slack in the system, and if they play hardball, it could get really dicey really quickly.
Yeah, we'll see how this all plays out. And again, that's what I'm saying. That's still a caveat. The other thing that's happening too is China cannot get rid of COVID.
Yeah, and, they're shutting down Macau or something.
It's coming back now. There's lockdowns there again. Some other countries are experiencing. So you still have that kind of situation. As soon as the supply chain opens up, shuts back down again. So, there are things out there, and these are just the reality of the world we're living in right now. These are the things that affect consumer sentiment, prices at retail level, which that's what drives GDP in this country is retail spending. So that's why these things are so important, and why the markets are reacting the way they're reacting. And that's why I say a 9 handle is good, because I think you could start to get consensus around some peak inflation at that point if these other things subside.
Yeah, I think you're right, actually. Yeah.
And start looking for, some light at the end of the tunnel. And, you'll see the initial downward trend, but then you'll see a nice little rebound off of that. And then everybody will start talking about, like they already are, that the Fed's going to pull back or even pivot. And,
Come on, they're going to pivot in July. Oh, no, I meant September. Oh, no, November. Yeah.
Well, and let me tell you, the Fed ain't going anywhere. They are going to get inflation down. They're going to do whatever they have to do. And if something breaks, they're going to plug that hole. They're not going to change their policy on inflation because they can't.
They can't. Yeah.
I mean, that's doing more harm than anything else right now, especially to lower income earners. I mean,
we've talked about it many times. Yeah.
Yeah. It's real and it's political, and, they're not going to change course. And, the economists are all talking all this stuff, and they've all been wrong. They're always wrong. The economists are always wrong. They're theorists. They've never had to earn anything. They've never had to build anything. They're just theorists. And it's just amazing how wrong they've had it. Janet Yellen's one of them, right? She's an economist. She's never had a business, built a business, done anything like that. Yeah. She said there was no inflation. She said there's no recession. I mean, it's just, it's all political talking points, because they don't want people to get into that mindset, because that's a lot of it. The psychology of a inflationary psychology, recessionary psychology. So it's important how people think and feel. So that's why they put these talking points out there to try to fool people. But you can't fool them when when the dollar gets cut in half on what you can buy. You ain't fooling anybody.
Yeah, when you look at your gas pump and it's $130 to fill up your tank for your car, not your SUV for your car.
And you see the news, gas prices dropped, 10% or whatever it was, or 20 cents, last week. Well, it's still twice what it was, 2 years ago, a year ago.
Yeah.
You know what I mean? So that's great news, getting a little relief, but you're talking about $5 less per tank when it only cost you half as much. So, every bit's good, but we're nowhere near where we need to be.
Yeah. Again, this is a crazy week. I don't remember a week, and certainly I don't remember a summer week, a July summer week. This could be a week that we write about in textbooks, right? We actually have 3 key economic reports: CPI, sentiment, and retail sales. And then we have the start of earnings seasons, which again might be at this inflection point. We got the rear view mirror. Q2 was okay, but companies really could say second half, no bueno, not good.
Or they just say, we don't know. I mean, which a lot of them are saying, we're removing guidance, we just don't know.
Yeah. The other thing I think is really likely, because early in my career, I was what was called a general ledger accountant. And I was in executive meetings as a total peon, like sitting against the back of the wall, just watching the executives basically play with the balance sheet and income statement. And I strongly suspect that a lot of CEOs and CFOs are going to go into this quarter, Greg, and actually use it as an opportunity to lower expectations. Why is that? Well, if there is an opportunity to lower expectations, most executives take it. And if everybody takes it, nobody gets overly punished. And oh, by the way, let's not be confused. A lot of these executives are rewarded for stock compensation. So if they can lower Q3, Q4, Q1 expectations and then beat it, it's a layup for them. So I actually think there's a lot of executives who are going to come into this earnings announcements right now are meeting with their accountants going, how can we lower expectations a little bit so we can make the next quarters look even better, right? Their job is to beat and raise, beat and raise. And I think this is the quarter they lower expectations. What do you think of that?
Yeah, absolutely. Not only so they can beat and raise, but if they miss, then that's even worse,
Oh,
so,
yeah.
the last thing you want to do is miss, that's when you get replaced, when you start missing guidance, so
Mhm.
yeah, you want some comp growth, you want to beat projections, and, we see the results of that with the markets in their response. So
Yeah.
absolutely.
Yeah, but again, executives, I think I can picture myself as a 23-year-old accountant who has no right being in these rooms watching these executives go, hey, we could release numbers. Again, I'm making it up for my history, 18 cents a share. How can we adjust that down to 16, pad a little bit for the future, lower expectations? It's going to happen. So I can just wait for these earnings call. Oh, we did this, or we reserved that for bad debt, or we wrote this. I think this is the quarter that all executives or most executives go, hey, we have an opportunity to talk recession, talk inflation, talk strong dollar currency issues. Let's lower expectations. And I don't think Wall Street's ready, because Wall Street analysts suck right now. They haven't really cut estimates, and I think it's going to happen this week.
Yeah. They have to be careful. They're trying to, ease the thing, land the plane softly. They don't want to crash landing. So, everybody knows you don't want what, you just don't want the markets to crash. So you got to kind of let it leak out slowly, kind of like that slow leaking tire,
Yeah. Gotcha. Well, do me a favor. This has been so much fun. Where can people find you? Because you put out amazing content like this big week ahead video this morning.
Yeah, gregdickerson.com. Go check it out. My YouTube channel, all the links are there. gregdickerson.com.
Thank you, buddy.